Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That is a great place to post questions, comments, and content related to the topics of the channel, which I'll go over in just a moment. Then I'm also on X, formerly known as Twitter. My name there is @Pless. And normally when I post on something on Twitter, I post it in Discord as well. In Bookmap Discord, Spotgamma Discord, so multiple locations. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap, real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. My analysis is based on the options market and of course order flow as well. But setups can be taken any number of ways. For example, the S&P 500 trades can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post. And hello, Derek. It's afternoon for me. Welcome. Glad you're here. My agenda for today, the items that I want to cover, first of all, news items, economic data and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I will be glad to do that. All right, so first of all, news items, economic data. There were several pieces of data released this morning. First of all, the ADP employment data came out at 8:15 a.m. Eastern Time, and that was much less than expected. So in this case, bad news was good news. So at least initially, the market interpreted that as bullish. And then PMI data came out, services and composite PMI data at 9:15, 9:50, 9:45, and 10 a.m. Eastern Time. And that data was mostly in line, slightly greater than 50, indicating expansion. And then also factory orders came out at 10 a.m. and that was greater than expected, also greater than 50, I believe. Anyway, greater than expected. All right, so that was data for today. And then on Friday, the employment report comes out. That's the big monthly employment report that comes out at Friday, the first Friday of the month at 8:30 a.m. Eastern Time. And that can be a pretty big market mover. All right, so that's the data for today and the rest of the week. All right, let's get started with positional analysis now. I'm going to start with the S&P 500. This is the ES futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to the SPX. This is a 30-day, 1-hour chart for SPX, just showing price and key levels. I've highlighted the September 15th expiration. That was large, call-dominated expiration. And the downtrend began then and still really continues. Price is still making lower lows. All right, let me point out some key levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. And note that SPX was testing that testing that level earlier today, the lower weekly expected move. We'll take a closer look at that in just a moment. So that is the weekly expected move. That's based on the options market, pricing in risk for a 1 standard deviation move for the week. So 68% of the time, SPX should trade within that range. All right, the dashed blue lines are showing the lower and upper daily expected move. SPX trading within that range as well, but up toward the, earlier today, up toward the upper daily expected move. There are also some Spotgamma levels on this chart. These are key, these are proprietary Spotgamma levels provided to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, here's the put wall at 4,200. That's a strike with the largest net negative gamma that can be expected to act as support. And actually below that, rather odd to see the absolute gamma strike. That's a strike with the largest absolute gamma. We'll take a look at that closer in just a moment. That's at 4,000. So very unusual to see that level below the put wall. Typically, the put wall is the lowest of the key daily levels. The call wall, which we'll take a look at in just a moment, is the highest of the key daily levels. So now the absolute gamma strike did move pretty significantly lower from 4,300 to 4,000 today. So above that, again, the 4,200 put wall expected to act as support. And then above that is the volatility trigger at 4,350. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility, both up and down. And then finally, the call wall is at 4,450. That's a strike with the largest net positive gamma, and that can be expected to act as resistance. So those are the key daily levels, and the only level that shifted lower was the absolute gamma strike from 4,300 down to 4,000 today. So pretty bearish shift lower for that absolute gamma strike. All right, let's take a look at another SPX chart for today, just to take a look at the levels that are in play for the day. Zoom out just a bit. So I have part of yesterday here showing a gradual uptrend that began right around 215 yesterday, shown by this yellow trend line. SPX traded below the lower weekly expected move, and that level stays the same for the entire week. and gradually made a series of higher lows, and today traded above the lower weekly expected move, came close to testing it but never really did. And then up until well, maybe an hour or so ago, price was headed up toward the upper daily expected move. All right, so that is the SPX, actually looking at 2 days worth of data there in a 1-minute chart. And the only Spotgamma level that's in play here, shown here, is this combo level at 42.51. There's also the 42.50 was noted as resistance in the Spotgamma AM Founders Note. All right, let's take a look at Bookmap now. And I've zoomed pretty far out, showing the European Open here. Let's see, that's right around 3 a.m. Eastern Time, right about here. And this uptrend began then right around the European Open. Nice steady uptrend. I'm going to zoom in a bit. So here's the initial reaction to the ADP data. Quick up move. Then right around the cash open, just after the cash open, price moved down, back down to the SPY 421 level. And then for the S&P 500, there was one initial move higher right around 10:30, and then the real move higher right around 11 a.m. I'll talk more about setups in a few minutes. And that was really the best setup of the day, this reversal higher right around 11 a.m. Again, at the SPY 421 level, around that level. All right, so here's this. When we were looking at the SPX chart, we saw that combo level, that's right here, and the 42.50 resistance level just below that. So those are SPX levels. And note there is a difference in price between ES and SPX. And let's see what it is right now. I'm using 35. It may have changed a little bit. So it's somewhere between 34 and 35 today, ES minus SPX. So I'm using 35, so that may be a little bit different. But anyway, I have, in my cloud notes, so I have the SPX levels corrected to the correct ES level. Also the SPY levels, there's the 421, and no Spotgamma levels in play for today. Just primarily the lower weekly expected move and the SPY round number levels, 421 and 424. And then for a while the 423 was acting as resistance. More or less, not exactly around those levels. All right, so those are the levels in play for today for the S&P 500. For SPY, the put wall did shift lower from 425 to 420. Call wall shifted higher from 432 yesterday to 455, so the call wall is not really in play. And then the absolute gamma strike, just like SPX, shifted lower down to 420 for the for SPY. I'm going to zoom back out. So this is the SPY 420 level right here. And that level was in play right around 4 a.m. Eastern Time. Price moved quickly above it, did a retest, and now continues, the S&P 500 really continues to trade higher. All right, so those are the shifts in levels. and the levels in play for the S&P 500, and mostly I interpreted the shifts in levels for the S&P 500 as bearish. All right, let me check for questions. Uber Trader says, hit the like, thank you. And good afternoon, trading for a living. And Uber Trader, is this any better? I have a mic, I have a headset with a mic just right in front of my face. I have the gain turned up as high as I can. So let me know if this is any better. And as far as I know, I've done all I can. All right, let's take a look at NASDAQ. And you're welcome, Uber Trader. All right, let's take a look at NASDAQ. And a reversal higher. Much more of a steady uptrend here in NASDAQ, reversal higher. All right, Slowdown says, Mike sounds great, loud and clear, great. Thank you, Slowdown. All right, so the NASDAQ uptrend began at the European Open, 3 a.m. Eastern Time, with a test of the lower weekly expected move. And now price is was trading up above the upper daily expected move. Big move in NASDAQ, a lot of levels here. Let's take a look at a QQQ chart first so we can isolate the QQQ levels. And there's that uptrend. See if we can adjust this a little bit, make that a little bit more realistic. All right, so there's the uptrend again that began around 3 a.m. Eastern Time at the 352 level, round number for QQQ. And QQQ traded up to the 359 level. And there are a couple of Spotgamma levels in play for today. This combo level at 354.92, and then this large gamma 2 level at 355. So that's in range, but not really in play for today. All right, so round numbers 352 at the European Open, up to 359 during the U.S. regular trading hour session. All right, let's take a look at NDX just for completeness. So NDX, here's this combo level, same combo level, combining QQQ and NDX, gamma weighted open interest into one level in the previous chart in terms of QQQ price, and this chart in terms of NDX price. Let's go back to Bookmap here, again, NQ futures. Support around the QQQ 352 level, NQ 14,600, as well as the lower weekly expected move, and resistance at the QQQ 359 level, which is just above the upper daily expected move. And note all of the pink volume dots in here as aggressive sellers come in. And we'll take a look again at setups in a few minutes, so we'll see what options traders are doing. All right, there were a few shifts in levels for QQQ. The call wall shifted lower from 400 to 380. So still not in play, but a big shift lower. And the absolute gamma strike shifted lower from 360 to 350. So the absolute gamma strikes shifted lower for SPX, SPY, and QQQ, and there were no shifts in levels for NDX. All right, let's take a look at gamma notional now and see how market makers were positioned on the gamma curve at the beginning of the day. And as you can imagine from the move down yesterday, that Gamma Notional is quite negative today. So this is Gamma Notional. This is what I'm looking at. And I look at Gamma Notional for SPX, SPY, and QQQ. So again, these numbers are quite negative. SPX, 1.264 billion. Gamma Notional for SPY, almost twice as large as SPX at minus 2.58 billion. And then also minus 1.022 billion for QQQ. So what this means for each of these products, traders are long puts, market makers are short puts, and when price decreases, those puts are gaining value and they have to sell futures to hedge their delta exposure. On the other hand, if price increases and implied volatility increases, those puts lose value and market makers can buy back short hedges. And that is a put Vanna rally. And this is something that you always want to look for. That's one big reason I look at this Gamma Notional every day, is look at the potential for big moves up and down. We'll take a look at the Vanna model in just a minute. So if in this situation the price moves higher, implied volatility drops, that is, we know that there is the tank is full for a put Vanna rally. This put Vanna fuel, the tank is full and can lead to big rallies. And it again works the other way around. As if price continues to drop, implied volatility increases, market makers need to sell futures to hedge their delta exposure. So let's see what that looks like in just a moment. One thing that I did want to point out is the absolute gamma for SPX. Excuse me. This is the 4,000 strike that I was talking about earlier. All right, it's hard to get it exactly. 4,000, that's the absolute gamma strike. What this chart is showing is absolute gamma for SPX. The orange bars are showing call gamma or positive gamma, and the blue bars showing negative gamma or put gamma. And combined, that's the strike with the largest absolute positive and negative gamma. So that is the absolute gamma strike. All right, let's take a look at the Vanna model now. I'm going to go to SPX. What this chart is showing is market makers delta notional on the vertical axis and price on the horizontal axis. So there are two curves on this chart. The first, the light gray curve, is showing how market makers delta notional changes with changes in price only. Then the purple curve adds implied volatility to the equation. So that is showing how market makers delta notional changes with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. And Vanna is a second order Greek. All right, let's take a look at price. We'll take a look at the low of the day and then where price, the current location for price. So I have the low of the day for SPX during the regular trading hours when SPX trades. Right around 42.20. So that's right here. So what this chart is showing, we'll focus on the purple curve. As price increases, price is increasing, implied volatility drops, market makers can buy back short futures. And that is a put Vanna rally that will tend to increase the range and volatility of any moves, again, up or down. All right, let's see where SPX is trading now. And remember, it did trade higher than earlier in the day. Right now, SPX is right around 42, between 42.35 and 42.36. So let's go back. All right, so somewhere between these two levels. So there's been a slight put Vanna effect with the move higher. Let's just go check and see what the high of the day was. Go back to this chart. So SPX high of the day around 42.56. So that's somewhere between these two lines. So there was definitely a put Vanna effect, helping to fuel that initial move higher. All right, so that is the SPX Vanna model. Let's take a look at SPY. By the way, this curve with a very steep skew to the left is typical of a negative gamma environment. SPY, the low of the day, was right around 421. So that's right around here. So SPY is trading slightly above that. So for the move higher today, so far there was a bit of a put Vanna effect as well. And then let's take a look at QQQ. QQQ, the low of the day around 355. Currently trading at 357. So there are definitely other factors in play, but this is always something to keep in mind in this very negative gamma environment. All right, my thesis for the day based on this was basically two parts to it. First of all, volatility, looking for higher volatility no matter what. And based on the shifts lower in these levels, especially the put wall for SPY and the absolute gamma strikes for SPX, SPY, and QQQ, thesis was bearish. And on the other hand, what has really been driving price for the last few days is Treasury yields. So key for today was, just like yesterday, watching Treasury yields. So for today, the 10-year, 2-year, and 30-year that I track are all negative for the day. Let's just take a look at Treasuries. So this is VIX for today. And VIX is slightly lower for the day, but now starting to pick up just as price has been dropping. Let's just check the 10-year. So this is the 10-year micro futures. And note the sharp drop that began. This is right at 3 a.m. coinciding with the rally that began at the European Open. And this downtrend continued up until about or around 8:30, and now really seems to have leveled off, maybe moving a little bit higher again. Let's go back to VIX. So these days it is important to watch both Treasury yields and VIX along with the rest of your analysis. All right, so if So I talked about my bearish thesis based on shifts and levels, bullish thesis, alternate thesis, depending on the move, the direction in treasury yields. All right, let's take a look at some setups now. All right, let me check for questions. All right, so Truman asked, in a positive gamma notional market, market makers are traders long calls and market makers short calls? No, it's the other way around. So in a positive gamma environment, on the call side of that gamma curve, first of all, I believe this is, well, let me just tell you what Spotgamma assumes. It's not 100% this way, but well, first of all, market makers assume that traders are long puts and short calls. Now I'm assuming that traders are buying puts and paying for them by selling calls. And just think of the JP Morgan collar. And that's exactly what JP Morgan does. They for their fund, and that, that's a topic of a discussion, especially at the end of every month. Instead of buying a put, JP Morgan buys a put spread, and then they sell a call to pay for that. So that's the assumption, that traders are long puts, market makers are short puts, and then traders are paying for those puts by selling calls, so market makers are long calls. So when they're long calls and price increases, they have to sell futures to hedge their delta exposure. And Druman says, I have to remember that is for index products and not stocks. That's correct. So it's a different assumption for stocks. But for index products, Spotgamma assumes that traders are long puts and short calls, market makers are short puts and long calls. All right, I hope that makes sense. All right, let's take a look at some setups now. I'm going to start with the hero signal here to see what options traders have been doing. And this chart is showing price for SPX and the hero signal. And the hero signal is hedging impact real-time options, HIRO. That's what that stands for, showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So if you trade any form of the S&P 500, this is the signal that you want to take a look at. All right, let's zoom in on this. And I'm going to focus on really just highlight one setup here. And this is and I don't know why all these flow alerts are here. This is not, typically the flow alerts are on SPY rather than the combined S&P 500 signal. But what this chart is showing is right around 1050, traders started taking positive delta positions, and we'll see in just a moment they were buying calls. So the call buyers became more aggressive, and price responded about 10 minutes later right here. Traders are buying calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. Zoom in just a bit more. So that's a clear divergent setup. That's one of my favorite setups. Let's see, separate out puts and calls. So you can see the slight slope in the put line, pretty flat, and they were selling, whoops, I don't know, I need to report that to Spotgamma support. I don't know why it jumps like that. There's nothing I did. Sorry about that. Buying puts right around 1050, that stops. They start selling puts. You can tell by the slight upward slope in the put line, the blue line, and also about the same time they start buying calls. That's shown by the rising orange line. So when both lines are rising, Spotgamma has pointed out this is a very powerful signal. Traders selling puts and buying calls at the same time, and that supports that move higher. All right, let's go take a look at Bookmap. So that's about 11 o'clock. Is that it's a slightly higher low from 1030. Let's go to Bookmap. Zoom in a bit. And we'll take a look at the clues that were available in Bookmap as well. So in both of these moves higher at 1030 and 11, you can see the shift in order flow. The magenta volume dots are showing aggressive sellers. Those are buy minus sell. And the green dots are showing aggressive buyers. These dots are delta, so buy minus sell. When there are more buyers than sellers, the color of the dots is green. And the aggressive buyers start to come in at 1030. Price goes back and rechecks the 421 level, and then moves higher again as aggressive buyers start coming in. Let's take a look at the subchart here, and we can see all along with this rising light blue line that there are larger traders buying with iceberg orders. The rising light blue line is showing us a sum or cumulative of the large traders buying with iceberg orders they use to hide their size. Also the dark blue line showing cumulative volume delta, that's also increasing. And then finally, as the move gets going, buy stop orders help to fuel the move higher. And that's also shown by the on chart indicator there with the small green dot. Those are buy. That's 1070 contracts buy. It's aggregated into that. If I zoomed in, it would separate it lower, but that's aggregated. 1070 contracts buy stop order. So all of the lines in the subchart are rising. We know aggressive buyers are coming in. We also know that traders are buying calls and selling puts. Market makers take the opposite side, so they have to buy futures to hedge their delta exposure. So very clear setup shown both in Bookmap here as well as Hero, Spotgamma Hero, for this long setup. All right, so that was the really the setup that I wanted to highlight for the S&P 500. We'll take a look at the live market in a few minutes. We'll see what options traders are doing. All right, let's take a look at NASDAQ. Let's zoom in. All right, pretty similar story for NASDAQ here. All right, here is the 1030 reversal higher. Takes a while, but aggressive buyers come in. And note the reversal higher at VWAP. and that is kind of a theme of the day of the stocks that I'll take a look at in just a minute. And then the higher low at 11 a.m. and you can already see the shift higher in the subchart. Let's take a look and see what options traders are doing. Let's go back to Hero. Oops. Go to the total signal. Let's take a look at NDX or NASDAQ. This is a combined signal for NDX and QQQ. Zoom in a bit here. So here's the 1030 reversal higher. Very strong correlation with options trades and price action. Then the higher low at 11 a.m. All right, let's separate out puts and calls. So you can see that really call buyers all these numbers are pretty evenly matched, but call buyers I think were helping to drive this move higher. Call buyers become more aggressive, and for just a few minutes they were selling puts. They start buying puts again. That activity levels off. Call buyers continue to buy calls. Price moves higher. Let's go back to Bookmap. So we know that overall net during this time period, traders were taking positive delta positions. We can see that there are aggressive buyers coming in at these low points, reversal points. A lot of green volume dots. Large traders steadily buying with iceberg orders. They used to hide their size. Buy stop orders helping to fuel the move higher, and also cumulative volume delta increasing. All right, so right around the same time, bullish setup in NASDAQ, as well as the S&P 500. All right, let's take a look at some stocks. Let's go back. I'm going to go through a few pretty quickly here. First, AMD. Traders taking positive delta positions up until about 12 noon. They take the foot off the gas and price drops. This is very, very typical pattern. I show this every day. Let's go take a look at Bookmap. And here is a typical pattern that I'll show in multiple stocks today is this reversal higher at VWAP. There's the 1030 test of VWAP. That's the light blue line, that's VWAP. And then the 11 a.m. test. All right, the next stock is Meta. And here's the 1030 VWAP test. Price moves higher. In this case, order flow is a lot more bullish, a lot more green volume dots in Meta versus AMD. Let's see what options traders are doing in Meta. Not quite as clear. A lot of flow alerts. Here's the sharp shift higher in hedging flow, options trades right around 10:30. Traders start taking positive delta positions. Price responds higher at 300, which is the key gamma strike. So there was an initial test of the 300 level, and then price made a higher low, did that test of VWAP as traders started taking positive delta positions. Price moved higher. Let's go back to Bookmap. So 300 is the key gamma strike. Acted as support. Price moved higher. Came back and tested VWAP. And now moved higher from 300 up to 306. Note this high liquidity at 305. Primary price target. That liquidity, that is showing resting limit orders in the order book above price. It is limit sell orders, and buyers seek sellers, and that liquidity tends to attract price. And then price made it all the way up to the Meta made it all the way up to the 306 liquidity there as well. And note this liquidity typically comes in just a few moments after the cash open, and typically stays in the order book until it's filled. So that's where the traders want to do business pretty typically at the round numbers, especially the zeros and the fives. All right, so that's Meta. The next one, Microsoft. Let's go see what options traders are doing in Microsoft. So options traders taking positive delta positions, very strong correlation. Sorry about that. There was an emergency alert test. It just about blew out my eardrum. Sorry about that. All right, so pretty typical pattern again. Traders take positive delta positions up until about noon, take their foot off the gas. In this case, they start taking negative delta positions, and price moves lower. All right, let's take a look at, and note 320 is the key gamma strike. So let's go to Bookmap, 320 key gamma strike, and price reversed at the 315 hedge wall right at the open. Let's go to Bookmap, Microsoft. There's the 315 level and the 320 key gamma strike target. VWAP test, not exactly, but close enough, as traders were taking positive delta positions. Let's take a look at Nvidia. All right, Abu says he got that alert too, I guess. All right, so here's the Nvidia choppy day today in Nvidia. Let's see what options traders are doing. Here's the 1030 reversal higher. Hedging flow shifts from negative delta to positive delta. Flow alert comes in. Price moves higher. Traders take their foot off the gas. Options traders take their foot off the gas. Start taking negative delta positions. Price moves lower. Let's go to Nvidia and Bookmap. $10.30 reversal higher, this time well below VWAP. Then the 11 a.m. retest, higher low. Price moves up to 440. Again, high liquidity price target. All right, then finally, let's take a look at Tesla. Very nice uptrend in Tesla today. Let's see what options traders are doing. And Abu says, yes, and I'm in Cincinnati, Ohio. I think this was a national thing. So it was all over. All right, so very nice uptrend in Tesla today. Options traders definitely helping to drive price higher. Note 250 is the key gamma strike. 260 is the call wall. And really the move higher began at the open, consolidation, and then just after 10 a.m. traders started taking positive delta positions again. Price moved higher and really continued higher until about 1:30. Then options traders took their foot off the gas. So very bullish day in Tesla. Let's see. Let's just see what options traders are doing. So really call buyers driving price higher, shown by the rising orange line. Notional value here is almost is 206 million, and this for the put line, that's 531k. So they are selling puts, but not to any extent. The call buyers are really driving price higher. So that was the key to look for with Tesla today. And when traders buy calls in a stock, market makers sell the calls. That's a negative delta position, and they have to buy stock to hedge their delta exposure. So very simple mechanism that can drive a stock a lot higher. All right, let's go take a look at Bookmap. Big move open from the open. 1030. Whoops. 1030 reversal at VWAP, light blue line. A lot of aggressive buyers here, as well as options traders buying calls. This is very bullish for Tesla. Note all the green dots starting just after 10 a.m. We can take a look at CVD for Tesla, and it should be a straight line up. Right, starting right here. Aggressive buyers, call buyers, all driving Tesla price higher. All right, let's take a look at the live market now. Let's go to the S&P 500. So this area between, oops, wrong tool, area between the 4250 level and SPY 424 really acted as resistance. Now large traders are selling with iceberg orders. So the iceberg flow shifted from positive to negative. Cumulative volume delta flattened out, and now sell stop orders are helping to fuel the move lower, maybe back down to the lower weekly expected move. Let's see what options traders are doing. Let's go back to the S&P 500. Zoom in on this chart. So right around 1:30 when I began today, options traders started taking positive delta positions. Slice and dice this a little bit. That really doesn't add a lot of clarity. The call line sloped up slightly and the put line sloped up slightly. Let's see if we can shorten the look back period to get more clarity. Oh, this is nice. That must be new. So normally this chart normally begins before the cash open. So I deselected that. Now we're just seeing the RTH, regular trading hours. All right, let's zoom in on this a bit. So what this is showing is that right around 1:30, traders started selling puts and buying calls. That's shown by the rising blue line for puts, the rising orange line for calls, and price has not responded yet. All right, so let's take a look now and see what zero GTE traders are doing. So they are driving a portion of the options trades and hedging flow today, but it looks like the options trades and hedging flow are really dominated by the all expirations. All expirations shown with the purple line, the typical hero signal, and the zero DTE trades are shown with the green line. All right, let me check for questions. Truman says that flow alert would have really helped me. Yeah, these flow alerts are definitely helpful. It's something that, the way I look at it, is something to draw my attention. Another pair of eyes looking at a list of stocks to draw my attention. And Carl asks, what happened on ES big sell orders? Nice big buy? Just odd price action, I suppose. I'm not sure I understand your question. All right, so that's the S&P 500. Options traders started taking positive delta positions right around 1:30. Let's go back to Bookmap. So it looks like ES may be finding support at VWAP. Let's zoom in on this. I'm going to focus on this little consolidation pattern here. So a couple of checks of around below VWAP around the 422 level, just below. Price makes a little final move lower, final shakeout. Now aggressive buyers are coming in as traders are taking positive delta positions. Cumulative volume delta starting to shift higher as again traders are taking positive delta positions. All right, Abu asked, can you please look at NQ? Okay, let's see what NQ traders are doing. All right, so it looks like NQ was trading between QQQ 357 and 358. One last final shakeout here just below that range, almost down to 357. And now aggressive buyers are coming in. And during this time, large traders were buying with iceberg orders. They really haven't let up, or they've let up a little bit, but still there are some large traders buying with iceberg orders. And now it looks like maybe buy stop orders helping to fuel the move higher. We'll see what options traders are doing, and then we'll call it a day. All right, so for the S&P 500, traders continue to take positive delta positions. One final shakeout, and now price may be moving higher for the time being. Let's see if it can break past this resistance level. And so far not. All right, let's go to NASDAQ, see what options traders are doing. All right, so for NASDAQ, options traders they started taking positive delta positions just after 1 o'clock. That leveled off and then has been trending lower. Just from this simple chart, looks like maybe NASDAQ has broken out to the top of that range. Let's go back to Bookmap. So so far right now, looking at this, it looks like 850 in the QQQ 358 acting as resistance. Looks like some aggressive buyers coming in again. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And I will see you tomorrow. Thanks again. Bye.